Hi everyone, welcome back to the channel. Today we're diving into one of the most interesting and volatile energy stocks out there right now, Sasol Limited, ticker SSL on the NYSE. If you haven't been watching, this South African energy and chemicals giant has been on a tear lately. As of February 19th, 2026, SSL closed at $8.09, up over 4.5% just yesterday, and it's hitting new 52-week highs around $8.13. In the last couple of weeks alone, it's jumped more than 12%. Pre-market today, it's pushing even higher toward $8.50 plus. So is this the start of a real recovery, or just another short-lived bounce in a beaten-down cyclical stock? Let's break it down step by step. The bullish case, the risks, key financials, and what I'm watching for in the big earnings release coming up on February 23rd, 2026. If you're new here, hit that subscribe button and turn on notifications so you don't miss these deep dive stock analyses. Let's jump in. First, a quick refresher on what Sasol actually does. Sasol is a massive integrated energy and chemicals company based in South Africa. They're famous for their unique coal-to-liquids and gas-to-liquids technology, basically turning coal and natural gas into synthetic fuels and chemicals. They operate huge facilities like Secunda, one of the world's largest coal-to-liquids plants, and they have major exposure to oil prices, chemical margins, and the South African rand. It's a high-risk, high-reward play tied to global commodities and the energy transition. Look at this chart. SSL bottomed out around $2.78 in the 52-week low and has staged an impressive recovery. The last few weeks have been especially strong, up 12.5% plus in just 2 weeks, with buy signals from both short and long-term moving averages. Volume has been picking up on the up days, which is a positive technical sign. Some technical models are projecting another 17 to 18% upside over the next 3 months, potentially pushing it toward $9.50 to $10. That's exciting momentum, but remember, this is a cyclical stock, so rallies can reverse fast if oil or chemicals weaken. Why are some investors getting bullish again? Here's the main case. Deep Value Metrics SSL trades at a ridiculously low price-to-book ratio of about 0.53. That means the market values a company at just over half its net asset value. Book value per share is around $14.15. For a company with massive plants and resources, that's screaming undervalued. P/S ratio is 0.33. EV/EBITDA around 4x. These are very attractive for the energy sector. Improving balance sheet and cash flow, management has been laser-focused on debt reduction. Net debt is coming down, cash position is solid, $2.5 USD equivalent, and free cash flow has been strong recently. They're prioritizing deleveraging over dividends for now, which is smart in this environment. Commodity leverage Sasol benefits hugely from higher oil prices and chemical margin recovery. Brent crude has been supportive, and they've got hedging in place for protection. If global demand picks up or chemicals rebound, earnings could explode due to operating leverage. Operational turnaround new leadership is delivering better reliability and efficiency at key sites. Fuel sales volumes are now guided higher, and refining margins have improved significantly in the latest period. But it's not all sunshine. Here's why many analysts remain cautious or even bearish. Thin margins net profit margin is only 2.73%, crushed by chemicals oversupply and lower average prices. Operating margins are better, but still volatile. Earnings pressure the upcoming interim results, H1 FY26, 6 months to December 2025, come out February 23rd. The early trading statement already warned a massive 89 to 99% EPS drop year over year, mainly from lower crude and chemical prices. Cyclical and ESG risks, heavy reliance on coal, transition pressures, South African economic/political factors, and rand volatility can all hurt. Debt is still elevated, so no dividends yet. Mixed analyst views consensus is neutral to hold/reduce in many cases. Some targets imply downside, while optimistic ones see big upside if execution is strong. Here is a summary table of Sasol Limited SSL key financial statements based on the latest available data. Let's see the investment strategies. Short-term outlook, next few weeks to 3 months. Some technical analyses suggest continued upside potential in the near term, with one source projecting a possible 17-18% rise over the next 3 months. Recent price action shows a rising trend by signals from moving averages and increased volume on up days, supporting potential for the rally to extend a bit further if oil/commodity sentiment stays supportive or if upcoming earnings, H1 2026 results expected around February 23, 2026, deliver positive surprises on cash flow, debt, or guidance. That said, short-term rallies like this can last days to a few months before pulling back, especially in cyclical energy/chemical stock. No rally is guaranteed to persist indefinitely. Longer-term/2026 forecasts, analyst views. Many sources show bearish/neutral consensus, with end 2026 predictions varying wildly, from pessimistic drops to $6-7 or lower in algorithmic models to more bullish outliers. Earnings growth is forecasted positively in some views, e.g., strong EPS recovery potential in 2026 to 2027 if operations stabilize and commodities cooperate, but revenue/sales estimates show variability, and consensus leans toward modest or flat near-term growth. Key factors that could extend or end the uptrend: bullish continuation, higher oil prices, chemical margin recovery, successful operational turnaround, debt paydown progress, or positive earnings surprises could fuel more gains, potentially months longer if macro tailwinds align. Reversal risks: pullback likely if oil dips, rand strengthens sharply, hurting exports, disappointing earnings/guidance, or broader market sell-off in energy stocks. Many analysts remain cautious due to ongoing challenges like chemicals oversupply and transition risks. In summary, the current upswing could persist for weeks to a few months if momentum and catalysts hold, e.g., into slash through earnings, but longer-term forecasts don't overwhelmingly support sustained multi-year upside. Many point a range-bound or modest performance in 2026. It's a high-risk/high-reward play. Monitor oil prices, rand, and the February 23rd earnings closely. The big catalyst is February 23rd earnings call. Watch for updated guidance on fuel volumes, chemicals outlook, debt progress, and any commentary on oil/chemical prices. A positive surprise on cash flow or operations could fuel more upside. Personally, I see SSL as a classic deep value contrarian play. High risk, but asymmetric reward if commodities cooperate and management delivers. It's not for everyone, but patient investors who can handle volatility might find it interesting here near multi-year highs. What do you think? Bullish continuation or pullback coming? Drop your thoughts and comments below. Are you holding SSL, watching for a dip, or staying away? If you enjoyed this breakdown, smash the like button, subscribe for more stock analyses, and I'll see you in the next one. Stay invested smartly. Talk soon.